morning, everybody. Good afternoon, good evening, wherever you are, and welcome to the 10-minute market property podcast. Jeremy, how are you today?
I'm all right. Yeah, positive. 2024 feels like it's going to be good, better than last year.
Yeah, what happened? Maybe we could just start with that, just to give people a bit of a review.
I mean, I think everyone was expecting it to be a bit of a disaster last year, weren't they? I mean, I think at the beginning of the year, major consultancies and so forth, you get your CBREs and Knight Franks, and like they did at the beginning of COVID, thinking, oh, maybe there'll be a 7-10% drop in prices. There was a vast range of ideas coming out there, and with some right, really, to have some pessimism. I mean, interest rates and inflation was soaring through the roof, and no one really knows how that's going to impact the market. But good old UK, ever resilient. It's kind of performed pretty well. So, I mean, the way I think of it is, property market goes in cycles. It's an investment for the long term, isn't it? Mid to long term. And so kind of over focusing on, a 6 to 8 month period is probably not doing yourself any favors. So yeah, all those predictions didn't come true. We just had Rightmove last week come out with their January reports and looking at different areas of the UK. And so it looks like it was on average across the board 0.7% prices lower than on a year-to-year basis. And so, whilst as investors we always want to see prices going up, considering what had been happening, I personally take that as a real bonus.
Yeah, and I think there's a bit of segmentation in there in terms of price points and where in the country as well. There are some little pockets that have done better, and there are some pockets that have done worse. But you're right, and it was an interesting year. Last year the Bank of England and the Monetary Policy Committee, 9 individuals, 9 people that became extremely important in our lives, started to dictate how much money we had left in our pockets.
Just 9? Is it just 9 people?
9 people. Yeah, I don't think we know any of them. I used to, but I must admit I don't now. I probably should. But December 2021, understandably, inflation was rising, core inflation. And, we had 14 rate hikes all the way up to the summer of 2022. It was only in August there were sort of noises of a pause, which has then continued for 5 months on the back of kind of inflation calming and dropping back. So, it was an interesting year. But as you say, it was a year of sort of watching and people waiting and people not doing that much in terms of investment into property. And inflation has now sort of begun to slow.
Yeah, 100%. I think that's going to be the dictator for everyone's decisions really this year, a lot of it. And certainly market consensus seems to be. I remember, the Bank of England's governor and, obviously some of the politicians, the aspiration was to get to 5% in inflation by the end of 2023. And we're currently at 4%. So I think that's probably an overachievement, probably from where they expected to. But on the back of that, we've had, it was the Guardian just last week was reporting that there was 3 of the major forecasters had started to re-review where they expected the UK economy to go over the last time. So that was Oxford Economics, Investec, and Deutsche Bank. They're reassessing, and so they think they're going to be getting back down to the 2% mark a lot sooner. So the chances of an April reduction in interest rates is far higher now, and actually the likelihood it says here, what is it? Financial markets have brought forward betting on the first likely interest rate cut to April and raised the likelihood of another 5 cuts before the end of the year, bringing interest rates below 4% for the first time since January 2023. So.
I'm not that optimistic, but there is optimism out there. I mean, for me, it just all depends on what inflation does. If inflation continues to slow, then yes, they'll do it. But there's still a lot of factors pushing inflation. So I'm interesting to see that outlook, Jeremy. Some thoughts that it might be a bit sooner.
I think I'm with you. I think 4% by the end of the year would be amazing. But yeah, we've been through the property game for an awfully long time now. We see the ups and downs, and it doesn't take much political swing to change things with the government or the Bank of England. So that per se doesn't worry me. I don't really mind about the figure at the end of the year. my property at home just come to the end of its mortgage rate, and it's just gone into its standard variable, which no one really wants to be on. So I'm currently on 8%. So I'm about to renew and look at my new mortgage. Yeah, and and that sounds, God, 2-3 years ago that would be unthinkable, wouldn't it? But it's just about understanding how to move with the market here. And so like I'm not too concerned, because all the major consultancies and general consensus is that we're going down now. So like I would, and probably for most of my clients, I'd be looking at something like a 2-year tracker now, and that means that I'm just kind of falling with the market, and my rates will kind of go in line. And so whether it takes the end of this year or a lot longer, like it's going in the right direction. So more comfortable.
It is. Yeah, I do the same. I'm looking to do the same. Get on a tracker, follow it down. I tell you, the interesting thing is, if the economy performs well, then there's less appetite to kind of drop it. There's less need to reduce rates. But if the economy continues to sort of flatline, there's this kind of conundrum of like, well, we've got to stimulate growth. So both of those outcomes are quite good for property investors. If economic growth is better, it's pretty good, because we're all going to be feeling better about buying. But if rates start being cut, they will also feel a lot better. So both of those kind of plays at the moment are probably, one of them's going to happen, in my opinion. But I really think this year is the year where people are going to start buying again. There was a pause. People were waiting. People were picking up good deals. I mean, we're a buyer, but it was certainly a year where things were a lot slower. And you imagine, we saw it in COVID. You imagine how when the market's kind of closed, the market was closed for a good few months during the sort of COVID pandemic when we were all in lockdown. And suddenly there was that rush to buy, right? And this is a longer close almost. This is the less people have been buying property during this rate hike than probably on the back of the COVID, the whole way through the sort of pandemic. So it'll be very interesting to see once this pause is turned off and the play button is hit again. My view is this is the year that people are going to start buying. So we shall watch this space. And
interest rates are, like it's not just a fiscal decision. Like I'm sure at the Bank of England, if there was no emotion involved, they'd like to be kind of moving in slightly different speed to. But this is a hugely emotive thing, particularly for Brits, particularly, like people buy property, and that's one of the major things affecting people's outgoings on a monthly basis. So, they are keen to start reducing the interest rates in that regard as soon as they possibly can.
Young people want to buy homes. They always have. And you know what? That leads into the next conundrum, is what is politically going to happen? Are we going to have a change of leadership? Are we going to see a Labour government come in? What's that going to mean to our, property and property investors? But that'll be our next podcast. So tune into the next one, and we'll cover a little bit on politics.
Well, that's a good point, Will. And, the political side of things, there's going to be a lot of toing and froing between the Conservatives and Labour now. We might get some, policies which are kind of vote grabbing and quite good for some property investors or property buyers.
Yeah.
We've just seen Rishi Sunak's announced a potential, it's not signed off yet, but a potential 99% mortgages available for first-time buyers, which will, clearly divide the opinion in market about whether that's a good or a bad idea, but it certainly will bring a lot more buyers in, which, the argument against it's pushing up prices. So, I think that's something we can explore a bit more as we hear more about it. But, something to look forward to for next podcast.
Yeah, I don't think a change in leadership would be too bad. I don't think the Conservatives have done all that good a job in the last 15 years. But hey, that's a statement. And maybe that's a reason to tune in again. So thank you for joining us. Please share, like, and subscribe. And we will see you soon.
See you guys soon. Thanks a lot.